come up with a business plan that is going to create the best ROI for our investors, ourselves too, if we're going to be general partners and limited partners in the deal, because that is an alignment of interest. Sometimes being a general partner without having your money in the deal doesn't always put you in perfect alignment with your limited partners who have put blood in the deal, not skin in the game. This is blood in the game. This is their hard-earned money, their investing, their savings. So I like to, with my limited partners, as a general partner, put money in the deal so I have an alignment of interest with my investors. Hi, everybody. This is Brian Lucier from BHB Group, LLC, with another Why Not Real Estate Golden Nugget. So we've unpacked some of the different aspects of syndications, how they get paid, how they're structured. In this clip, I want to explain a little bit about our buying criteria and what we're actually looking for in the markets, the emerging markets that we're looking for deals. So first, our target markets have to be emerging markets. So what is an emerging market? We've got a myriad of filters that we run our deals through and our markets through to make sure that we're investing in the right part of the country for the right part of deal. There's a lot of filters that we look at. One of the first things that we look at are employment drivers, are jobs going into the market. Okay. We want to track that. We want to see at least a 2 to 3% increase of jobs in any given market that we're planning on purchasing properties in. We need to have the job support. For every job that's created for a new industry, there are 5 other support jobs. So if a given market is going to add 10,000 jobs based on the factor of the butcher, the baker, the candlestick maker, and the different industries that are going to create jobs to support those, we're looking at 50,000 jobs. 10,000 jobs would equal 50,000 jobs, or around 40,000 jobs based on that type of industry. Because if a new industry or plant is going to be producing widgets in XYZ country, state, whatever, then they're going to need grocers and retail and restaurants and all those other things that we need as staples in lives to support those people coming into the market. So one industry coming up is going to raise the other industries for jobs. Supply constraints are going to be the ratios of people coming in to the amount of inventory that's available for rentals. So we're going to be able to look and find out how many rental units are in an actual area. And then there's other things we're going to look at as well. Now we're going to focus on the Metroplex area. As a motorcycle goes by, we'll let them pass through. You gotta love the beach. So the supply constraints. How many units are available, how many units are getting added, and what's the impact of the population growth moving in. So that's going to be in the Metroplex area. Then we're going to start looking at the suburbs. Where are the commuter paths? What are the best sides of the city to be living on? Do you want to be traveling in from east side, from the west side? We're going to look at all that. Where are the most desirable areas? We can look at traffic patterns on the morning news to give us more information on that. The GDP growth, we definitely want to be looking at that. Is the overall income for a market growing, declining? We want to see a 2 to 3% increase there to make it safe. And, you know, we may not always hit all of the perfect conditions, but based with a business plan and a value add proposition that we can apply to the property, whether it's been poorly managed or it's just updates because it hasn't updated in a while. If we can make it work, we're going to look at all of these factors. Then the multifamily cap rate trends. What are the cap rates in that area? Cap rates are pretty easy to figure out. You're going to look at your NOI and the most current sales prices. And with those two factors, you'll be able to figure out the cap rate. Or if you know your NOI and you know the cap rate, you might be able to calculate what would be the offer price on any given property. So we need to know the cap rates, and just our relationships with brokers and different agents. we should be able to just ask them and get a good cross section of what cap rates are going for in any of the emerging markets that we're looking for. And then the multifamily rental trends are rents going up, are rents declining. We've seen over the last 6-7 years just an increase. In the last 10 years, we've seen rents almost double, which is phenomenal, but we know it's not sustainable. So we're looking for those areas where we're still seeing an increase in rents, and they haven't necessarily hit the national average yet. So we're looking for areas that have more growth potential and the increase of rents. For the first time in our core market that we've been in for 20-25 years, I mean, this has been a tremendous ride. It's been a great time to be a property manager or asset manager. But for the first time now in the past couple of months, we've been starting to see it level out. And actually in this last month, this is April 2023, we've seen the first slight dip in 3 to 4 unit properties. So they may have hit that point of equilibrium where people just can't afford to pay for that size unit anymore. Then the multifamily occupancy trends. What are vacancy rates looking like? What are occupancy rates looking at? With the high demand for rentals right now, we've seen vacancy rents at all-time lows. We've seen occupancy rates tremendously. In our own market that we're in right now, we're seeing we could have 100 applicants for 5 units. So for every 20 people out there, there's only 1 unit, which reflects what we've heard in some of the national averages, that we're seeing a shortfall of 4 million to 5 million rentals for the population of the United States. Now, again, that happens in different markets in different areas. So that's definitely a factor we're looking at in the markets that we're looking at. Are we seeing a lion's share of that demand in a market we may be purchasing in? That's another factor we look at. We do have 3 targets right now. I'm not going to tell you what they are on this, but if you want to get in touch with us privately, I would definitely share why we feel these are better. And within the next month or so, we're even going to narrow that down to a tighter circle, a tighter grouping of what we think would be a good market for us to be in. Then how do we source our deals? Network. I've known from day number one, real estate is a relationship business, and it's building those relationships. And sometimes it takes 1, 2, 3 years to build these relationships where someone will know you and trust you and know that you do what you say you're going to do. You're not a pain in the butt to work with, and you're going to perform. If you're going to say you're going to buy a property, you're not going to retrade the deal or back out. You're going to be a performer. That will bring you more deals. It'll get you more accreditation, credibility. People just believe you, and people like to do business with people they like. So really, don't be a pain in the butt. You know, listen to people, be respectful, and try to make a deal win for everybody. That would be a good thing to do. Analyzing the deals and the underwriting. Man, we got to kiss 100 frogs to get to a prince. So at a high level, we're going to be analyzing the deals. Once we identified the target market we want to be in, we're going to get deal flow. You know, we've got a team of underwriters working at BHB Group. They're looking at a high level. Does it meet the first 3 or 4 criteria? If it meets that criteria, great. We'll dig a little deeper and spend more time underwriting the deal. If it doesn't pass the sniff test for the first 3 or 4 factors, then there's no need in underwriting the deal. If we think it might be something suitable for later, then we'll flag that, probably put it in our files. If we think there's something there, we may even make an offer at what we feel the property is valued at, and it might not go through, but at least we're out there and we have the offer out there. If it ever comes back onto the market, a broker's always going to look at who offered deals and contact them. So an offer on a deal we make today may not be taken, but 2 or 3 months down the road, if it falls out of escrow, or for any reason someone can't close on the deal, if we built that relationship, the deal could come back to us. And we've seen that happen with other deals, some of the smaller deals, but it does happen. The market location, we've talked about that. The history of a property. It's real easy to spend a couple minutes on Google or apartments.com or any of the apartment review sites like Yelp and just find out what's going on at the property. Is it getting bad reviews? Is it getting great reviews? Why is it getting great reviews? And more important, if it's getting bad reviews, is it something we can fix? If it's poor management, we can absolutely fix that by replacing the management with a solid team. And we've built teams before, and we'll continue to build great teams. If it's being poorly managed, we can absolutely look at the numbers and see where that might be occurring, and then look at ways to turn around the property and make it profitable. So that's definitely something we can do. And by finding the history of the property, it's going to, success leaves breadcrumbs. And failure leaves breadcrumbs too. So we can definitely find out more about a property by the history of that property. And then the condition of the property. Is it next to shopping? Is it next to schools? Is it next to a junkyard, or is it next to a dump? Next to hospitals or universities, those would be a bonus or a plus. Next to an oil refinery plant, maybe not so much. But yeah, we can look at the condition of the property. Deferred maintenance, that can easily be done by just walking the property. We don't necessarily have to notify the seller on that. We can just show up and visually walk the property. We can go there and say we want to rent the property and ask for a tour, and just make note of the roofs are in good conditions, the soffits, the foundations, the grounds, the landscaping. And we can ask questions. If we see stuff, we say, wow, has that been a problem for a while? Is that getting fixed? And we can find out the condition of the property. At the same time, we're looking at a target property, we can go out and visit the competition. We can drive the competition within a 1, 2, 3 mile radius. Do they have deferred maintenance? What do their rents look like? We could do an A to A apple comparison on our target property we're looking at purchasing and the competition in that market. Have they renovated the units recently? Are they getting higher rents because of those renovations? Is our target property we're looking at, has that been renovated recently? Is there meat on the bone where we could add value and increase the overall property value? That's definitely something we can look at. And then come up with a business plan that is going to create the best ROI for our investors, ourselves too, if we're going to be general partners and limited partners in the deal, because that is an alignment of interest. Sometimes being a general partner without having your money in the deal doesn't always put you in perfect alignment with your limited partners who have put blood in the deal, not skin in the game. This is blood in the game. This is their hard-earned money. They're investing, their savings. So I like to, with my limited partners, as a general partner, put money in the deal so I have an alignment of interest with my investors. So definitely I want a business plan that's going to reflect that, to create a great ROI, not only for the general partner, but absolutely for our limited partner. Our number one rule is to protect the money of our investors and then create a return, our targeted return. So that's how we structure our deals. That's what we look for, and that's how we find our deals. In another golden nugget, I'll break down our roles, the limited partners, and our process for building these teams and how we make it all happen. So again, this is Brian Lucier from BHB Group LLC with another Why Not Real Estate Golden Nugget. And here we are in beautiful Aruba. And I really hope you're enjoying these videos as much as I'm creating them for you. I really appreciate your time in understanding and just taking your time out of the day to learn a little bit more about this. I'm always excited about it. I love talking about real estate, and I really appreciate you being with us here today. So again, this is Brian from another Why Not Real Estate Golden Nugget, signing off.